Hi, and welcome to the latest edition of our Magellan Minute series. My name's Felicity Haynes, Head of Retail here at Magellan, and today I'm joined by Roy Harrison, who's a member of our infrastructure team. Hi, Roy.
Hey, Flick.
The growth of the communications infrastructure is crucial for our online society. What's driving the asset class growth and keeping it relevant?
Yeah, you're right. So the asset class is crucial. If comms infrastructure goes down, planes are grounded, emergency services don't function properly, and people get very frustrated that the content on their phone isn't loading fast enough. So it's safe to say the sector is mission critical. Now, there are a few trends playing out in the sector at the moment. I'd say two that are getting the most attention is, the first is cybersecurity. The second would be the demand for data centers driven by cloud computing and the arms race to train AI models. One trend though that I think is being overlooked by the market at the moment is the growth in mobile data traffic. Now, since 2017 globally, mobile data traffic has grown by around 50% per year. To give you a sense of what that looks like in a developed market where the majority of people already own a smartphone, that growth figure has been around 33% per year. So pretty staggering numbers. Over the most recent period, that's been driven by the increased consumption of video content on our phones. And whilst you might think there is a limit to how much doom scrolling we can do on our devices, the latest forecasts from Ericsson suggest that mobile data traffic is expected to grow by around 20% through to the end of the decade. And beyond the usual suspects driving that growth, such as mobile phone sales, social media usage, more video content, there are a few developments I'd like to call out that's going to drive those next stages of growth. So the first one would be 5G conversions. So people with 5G enabled devices tend to consume a lot more data than those without them, just simply because of the improved user experience. And it might surprise you, but only 60% of people in the North American market have a 5G enabled device. So we're only just past halfway in the rollout of this technology. The second technology I'd call out is fixed wireless access. This is essentially providing high-speed broadband to people's homes without the need to connect it to fibre, so via a telecommunication tower. And so that puts additional strain on the mobile network. Thirdly, I'd like to call out the Internet of Things. So that is millions of connected objects that communicate with each other and are integrated into various systems. So think of wearables that monitor your vital signs, sensors that provide predictive maintenance for large-scale infrastructure, and it's the technology that will enable driverless cars one day. And the final technology I'd call out hasn't actually been invented yet, or hasn't been adopted at a mass scale. So in the data transport industry, there tends to be use cases or new applications that pop up unexpectedly that turbocharge the demand for mobile data traffic. So in this category, could include augmented or virtual reality, some AI direct-to-device use case, or another app that is under development. So to summarize, mobile data traffic is growing, not just because of our phones, but because of the consistent development of new technologies that utilize the wireless network.
And given how connected we are, these trends seem fairly structural. So how can investors get exposure to it?
Yeah, so you've probably heard a lot about data centers recently, and that's one way you can play it. For our global infrastructure strategy, we prefer to invest in this structural growth story via the very defensive telecommunication towers. Now, these are local monopolies with highly predictable income streams. So to give you some context as to where the towers fit into this story, companies like Telstra in Australia or Verizon in the US, in order for them to provide the capacity to support all this mobile data traffic, they need to invest in their network. And they can do that in one of three ways. So the first way is through new spectrum. The second way is through technology improvements, so think 4G, 5G. And the final way is by building new towers or adding more equipment onto existing towers. So if we think about this capacity problem, spectrum is a finite resource. Technology generations have 20-year life cycles. So the only way to immediately address this problem is more equipment on more towers. So that's the structural tailwind behind these businesses. But we also really like the business model. And personally, I think these companies have one of the best business models ever. So what they do is they provide the passive infrastructure to the mobile network. So think of the steel in the air and the land under the towers. And companies like Telstra and Verizon, they rent space on their towers to hold their antenna equipment. So if we think about their revenue line, the tower's rental income grows at a fixed escalator of around 3% in the US, plus they get any ancillary revenues from the carriers doing works on their antenna equipment. The contracts are very long-term in nature, generally 10 plus years with the option to renew. And the operating and maintenance expenses for these businesses generally is very low because you're dealing with very basic steel structures in most cases. Plus, a lot of the incumbent tower companies manage thousands of towers in their portfolio, so they get a lot of benefits through scale. So the operating cash flows for these businesses is very predictable. The kicker is when you add another tenant onto your tower, your rental income almost doubles, and that requires very minimal incremental operating and maintenance expenses to accommodate that new tenant. So the majority of that new revenue goes straight to your bottom line. So what you get as an investor in these businesses is very stable, predictable income streams that grow as the telcos invest in their mobile network to satisfy the growth in mobile data traffic.
With any investment, we know that there's risks, and you guys spend a lot of time looking into that and weighing up the risk and return. So what are the risks associated with the tower companies?
Yeah, so I'd say if we're thinking about what's going to move the share prices for these companies over the short to medium term, I'd say the greatest risk has to be interest rates. Across our infrastructure universe, I'd say the towers are probably the most interest rate sensitive, and that's for a few reasons. So the first reason would be that unlike a lot of the regulated assets that we invest in, the pricing for these towers grows at a fixed escalator, as I mentioned before, around 3%. So the towers can't pass on abnormally high levels of inflation onto their customers. The second reason would be that because these towers are so defensive in nature, they can be quite highly levered. And despite there being mostly fixed rate debt on their balance sheets, when it comes to refinance that debt, what originally cost you, say, 3% can now cost you something like 5%. And then finally, rightly or wrongly, some investors view these businesses as kind of having bond-like qualities plus growth. So if you think about what these towers have delivered for investors over the last 10 years, say, they've given you around 5% cash flow yield, and those cash flows have been very predictable and have grown at mid to high single digits. So when you have a period of rising interest rates, that can reduce the demand from those sorts of investors that view these stocks simply as bond proxies, where the yield is very important to them. So yes, over the last 3 years or so, rising interest rates has resulted in the underperformance of these companies. But I think it's fair to say that the current interest rate outlook is more stable than it has been in the past, meaning these businesses, as they stand today, are better positioned to deliver stable and reliable returns moving forward for investors, which is what we like in infrastructure.
Thanks, Roy. It was great to hear from you today. And thank you for joining us. If you have any questions, please do reach out to the Magellan distribution team. And please feel free to share this video with any clients and colleagues. Thank you.